G'day, Internet. Max right here, and very, very happy to have a longtime friend, Dr. Jeff Ross, on the show for us today. How are you today, Jeff?
I'm great, Max. Thanks for having me back.
Awesome. Love to have you back, as always. So we had the Fed meeting just the other day. Why don't you give us a heads up and catch us up on what's going on?
Sure. The nutshell is he was more dovish than I think the market had anticipated. The market was kind of preparing for a bit of a hawkish stance. Because we've seen inflation metrics kind of pop back up a little bit. But he came out, I think he was decidedly dovish. And I think there was a major shift in the narrative as of yesterday where they've been completely focused on bringing inflation down. I think that officially got pushed onto the back burner and they're no longer as concerned about it as they are. So the most important point of everything that happened yesterday was this little sentence he said towards the end, and then he talked about it in the press conference afterwards, that they're going to slow the pace of the runoff. Basically they're going to slow the pace of quantitative tightening quickly in the near future. They're going to do that. And so to me, that's very bullish. The markets, I think, caught that as well. And they thought, okay, this is good. No longer is the Fed kind of trying to clamp down on inflation and therefore clamp down on risk assets via liquidity. It's the opposite case that's going on. So I think that quantitative tightening is going to go from being, where it was, which is kind of choppy sideways, to be honest, even though the balance sheet was running off, things that made up for it in the other direction that were expansionary were what was happening in the overnight reverse repo market and the Treasury general account. Now that main thing, the Fed balance book, the balance sheet of their mortgage-backed securities and of the Treasuries, that's not going to be as net negative for liquidity as it has been. So it's kind of nuanced, but the market's definitely picked up on that, I think. They're basically saying we don't want to remain so restrictive with liquidity conditions that we cause more damage to the economy. So therefore, we're going to let off the throttle a little bit. So overall, dovish, overall bullish for risk assets, bullish for Bitcoin, I think.
Gotcha. As a result, stock market went up, took a little bit of a jump, went to all-time highs. Bitcoin had a big green day. Of course, it was immediately following a big red day, so a little
Yep.
bit of a wash there. And so things kind of went up. So what about, did he talk much about interest rates and his predictions there?
Not a ton. I mean, his main focus still is on, he talks about inflation and they talk about it like they still really care about it. I just don't think they do. To me, we're just in this new paradigm, really different from the last decade where we had very low inflation, very low interest rates, very low economic growth rates. This decade, I think it's just a normalization where we have a higher general inflation rate. I think we're, used to a CPI of 0 to 2% over the last decade. This decade, I think we're going to kind of be in the 2 to 4% range. I think economic growth is going to be surprisingly robust for this decade as well. And because the long-term interest rates are based on growth and inflation expectations, I think we should expect treasury rates and, the yields on the long end of the curve to be higher as well, to be sort of in the 4 to 5% range where they are now. I don't think they're unusual. I think what they are now is they're normalized. And in an economy, I would argue, actually functions better when you have actual interest rates instead of the negative interest rates that we had back in the last decade. This just feels more normal to me, and we can see things now. Businesses that are not that great, they don't get the free money, they don't get the 0% interest rates anymore, so they have to prove that they're a viable business, or they go out of business. And businesses that can function and survive and thrive in a 4 to 5% interest rate world, they're going to do well and they're going to excel. So I think that's very healthy. Everything looks healthy to me, and I think Powell sees that too. And I think he's trying to say that without saying that openly. Is just that, look, we're in a healthy spot right now. We're not trying to be overly restrictive. We're not trying to overly ease. We think the economy is back. We think the recession is not going to happen. The recession that everybody has been calling for the last year and a half. I personally think we're past that. We're past that point now. I think their next recession has been pushed down the road probably until 2026. I think we talked about this on some of our past shows, but to me, it's all clear. The economy has bottomed and is starting to accelerate again. The business cycle is back in our favor. I will get officially bullish once I see global M2 money supply start to increase again. It's just been chopping sideways. We've talked about this in the past. It's been global M2 money supply has been in a range-bound, sideways, choppy, crabby pattern for 3 years. And so that's why I maintain sort of my crabbish stance. Now, it's been at the top end of that range, which, it causes me to be a bit bullish in my crabbiness. That's why I call myself the bull crab. When that finally breaks free and starts heading higher, that's when we have tailwinds. That's when risk assets have a tailwind sort of pushing them forward. That's when I'll get very excited about Bitcoin. I think that's when the price really starts to take off, and risk assets as well. I think we'll see another surge higher when that happens.
Gotcha. Now, many people predicted, I'm not sure if you were one of them, but for the last year or two, the thought was for Powell to become more dovish, there would have to be something that caused it. There would have to be something underlying. The economy was like, okay, there's some cracks appearing. We need to not push too hard here, or else we're going to break the foundations. Did he mention, or do you have any clues as to what that was, or do you think that's not the case? It's just there's been a no landing, and it's time to just put it in neutral and not be so aggressively on the brakes.
Basically, the latter point. So a year ago or so, I was into the first camp that there's going to be some triggering event, right? Like a deflationary collapse of some kind, or recession that would cause him to be forced to pivot. And that's what we're used to. That's what happened back in 2008, 2009. For sure, that's what's happened back in March of 2020 with COVID, that kind of response. That sort of, the world is ending. The markets are crumbling. The bond markets are seizing. We need to do something right now. And that pivot. So this is different. This is more, and I started talking about this maybe like 9 months ago or so, that this looks to me more like the mid 1990s. In the mid 90s, they started raising rates in response to what the markets were doing and inflation. They held them there for a bit, and then everything just started to normalize again, and the economic cycle started to rebound again. Inflation came down kind of naturally on its own, so they started lowering the Fed funds rate a bit, and then we had that surge, as most people remember, into the late 90s, the dot-com boom. That was because the economy sort of surprised everybody to the upside, and then we had this new whole internet.com movement, and the markets really took off. Risk assets really took off. I think we're in a very similar situation right now. I think we're going to have a bit of a surprising boom for the next year or 2 years, and it's going to surprise most people. There's still a lot of bears out there. I still listen regularly to, fellow macro thinkers that are very bearish. They still are pointing. We think that we're going to have a major crash or collapse. I just disagree. I'm optimistic, and I think it's all of the data that I look at points me to continue being optimistic. And I think the Fed, based on what the market is saying, right, the CME futures, they're still saying we get 3 rate cuts this year, and it's not because of any dire situation or circumstance. It's because they just don't need to keep the rates that high, and so I think they're going to get them more in line with what inflation is doing and what growth is doing. So by the end of the year, I wouldn't be surprised if we had no rate cuts, but I also wouldn't be surprised if we go from a Fed funds rate of a high of 5.5%, where it still is, down to maybe 5% or even 4.75% or so. And if that happens, I think the market booms, and it may get pretty hot again. So that's my generally optimistic in my outlook right now.
Okay, so a pretty good result there in terms of a soft landing / no landing. Pretty good result. Let's zoom in on Bitcoin a little bit. I think it's been galloping away here pre-halving, which I think is a little bit higher than what we were expecting from our last chat and our last several chats. But tell us, why don't you catch us up with what's been happening with Bitcoin, and have you changed your stance at all?
Sure. So the best thing that has happened is that my analysis based on prior cycles was proven too conservative. I was initially saying about 6 to 9 or 12 months ago that I was expecting about $45,000 by halving, based off of the last cycle. Now, the best thing that happened to me is I've had this belief, and I've been talking about this for 2 years, actually since 2021, that the 2021 Bitcoin bull market was cut short, that it was supposed to go much higher. And I know that people take, it is what it is, right? So reality was that the high was 69,000. I still contend that because of what China did in banning the Bitcoin miners in the middle of as that bull market was just getting going, knocking the hash rate down by 50%, dropping the price down because the miners were forced sellers, the Chinese miners that I'm talking about. If that had not happened, I think the price would have done what it should have done in its normal trend. And I think it should have gone to $125,000 in the fourth quarter of 2021. Why is that important? I keep talking about this. It's because based on past cycles, as we approach the following halving or the subsequent halving after that peak and bear market, and then as it starts to ramp up again into the next halving, that halving price is usually about 50 to 60% of the prior all-time high. So if we hold that the prior all-time high was about 70,000 like it was, then the price at halving should be around 35,000 to 42,000 or so. And that's where I was kind of getting my number for that. My range was 40 to 45,000. However, if it was supposed to be, and I know that's a funny thing to say, but if it was supposed to be a high of $125,000 based on all the technical analysis that I do, then we should see a range of $62,500 to $75,000, and that's 50 to 60% of $125,000. So hopefully that makes sense. So if that's true, this is what gets me so excited. Is to me that's confirmation, at least based on my analysis, that we're exactly where we should be, and that indeed 2021 was an anomaly. So my price at halving is still in this range of 62,500 to 75,000. To me, that confirms that 2021 was indeed an anomaly, and that's bullish. So I'm happy to be too conservative in my estimates, and I'm happy for Bitcoin to blow it out to the upside. It changes my end of year target as well. I said $100,000, 100K by Christmas Day of 2024. That is now higher based on the fact that I think 2021 has been proven to be an anomaly. So I think 125K by Christmas Day is a conservative estimate now for me. And I still hold my similar target for the end of 2025. That hasn't changed. So fourth quarter of 2025, I'm still saying $475,000 for a topping price. That may prove to be a bit conservative as well, but it remains to be seen. So in general, a much more bullish outlook than my initial conservative estimates.
Gotcha. And I'm sorry, you cut out there for a second. What was your the all-time high that you predicted?
So for fourth quarter of 2025, 475,000. I'm still holding that. That hasn't changed. And hopefully it'll prove to be conservative. We'll see.
Gotcha. Well, very, very exciting times if so. Okay, it's an excellent Bitcoin analysis. Let's talk a little bit. You did a podcast recently, and it was titled the four reasons I believe why Bitcoin will go up forever. I was wondering if I thought it was very interesting. Do you want to go ahead and make that case again here?
Sure, and it's that's well, I'll just say what I was actually talking about. What I was talking about is the way that a society decides on what its form of money is going to be. So basically right now, the world reserve currency and asset is the US dollar and treasuries. And I think that we're actually seeing the early stages of adoption of Bitcoin, that it will eventually become the world's reserve asset and the world's reserve currency. And so why do I say that? Well, you see four phases. This I did not make this up. This is kind of common knowledge for people who have studied the history of money. But all forms of money start as a collectible, and then they become a store of value, and then they become a medium of exchange, and then they become a unit of account. I think Bitcoin is going through that stage, and I think it's going much more slowly than most people think it should possibly. So one of the tweets I talked about, and that's where the prior interviewer, Brandon is his name, got it from, is this tweet I said. I said the 2010s was the decade where Bitcoin was a collectible. And we saw a CAGR, a compounded annual growth rate of about 190% for that decade, which is amazing. This decade, the 2020s, I think this is the decade where it's basically becomes a store of value, where the world starts to accept it as a store of value. And we have a CAGR of about 50-ish%. I think we're seeing that right now. We're seeing, people like Larry Fink of BlackRock and other people who are prominent Wall Streeters now, who were initially skeptical of it, are now basically calling it a store of value. They're calling it an alternative to the debasing dollar. Michael Saylor pushed that recently, and that caused a lot of people to get all up in arms. He's basically calling it a store of value technology. It's not a medium of exchange. He doesn't want people to think of it as a replacement for the dollar. I think he's right that that's where we are right now. I think the medium of exchange phase is coming. So we're clearly not there yet. And I've been arguing actually with fellow OG Bitcoiners who are more OG than I am even. They talk about, well, hey, they can use it in their daily lives as a medium of exchange. They can buy steak from their rancher using Bitcoin. They can sell goods, their goods that they have or they produce for Bitcoin. And I say, good on you. That's awesome. But the world is not there at all, right? You cannot go to the grocery store and buy stuff with Bitcoin. You can't go to the gas station and pay with Bitcoin. You always have to convert it to your local currency, which for most of us is the US dollar. and then use the dollar as the medium of exchange. So I think in the 2030s comes the medium of exchange phase, and then finally probably in the 2040s we get that unit of account phase, and then that's where it becomes by 2050, I think, the global reserve, not only the reserve asset that the people keep on their books as a store of value, but also the reserve currency that the world uses. That's how I say that's how I see it. I think as that goes up, and it gets bigger and bigger and bigger, I think the CAGR, the compounded annual growth rate, gets lower over time. To me, that's just that's how it works in this world. People who think we're going to see these just amazing 190%, annual returns, I think those days are definitely over. I don't think that's realistic at all. Things can't grow that exponentially fast for so long. Otherwise, it just gets too toppy and it collapses. So that's what I meant by that. That's what I was talking about. I think Bitcoin is just going, to me, clearly going through the phases of adoption, the 4 phases of becoming money on a worldwide ubiquitous level. We're not there yet, but we're definitely well along in the process.
I like it. I know someone's been out of the spotlight for a while, but he was Mr. Bitcoin there for a good 5, 6, 7 years. It was Andreas Antonopoulos.
Yes.
And he talked about those cycles, and he predicted, he actually went through history, and he even just traditional S curves and how long they take. And he just said it's just getting shorter and shorter. And he actually predicted it would be about 25 years from when Bitcoin had a price. So not 2009, but from 2011, I believe it was, when Bitcoin first had a price. From that point on, 25 years to where it becomes that money point. So it's an interesting comparisons. Let's see. Anything else that you're really catching your eye in the markets? What's going on with the technology stocks in the traditional markets?
Yeah, I think obviously there's a lot of hype about AI, and I think it's well founded. There should be hype, but it's going to create the next bubble, similar to the .com bubble for sure. All of the valuations of these companies like Nvidia, these semiconductor companies that are focused on AI, are just crushing it. I actually think that could continue. So again, this to me really rhymes with the late 1990s, the .com boom. I think that we're going to surprise to the upside. I think that the Fed is no longer going to be hawkish, but they're going to facilitate this kind of stuff more and allow things to run more. And I think that this portends to we're going to have a bigger crash to deal with a couple years down the road. I kind of have targeted 2026 for when a bigger crash happens, because we didn't really get our crash in 2022, 2023, that we were expecting a larger crash. So I think that these will continue. I think that the mega cap tech stocks, the magma stocks or the FANG stocks, or however people want to think about them, they continue to be considered global assets. So they continue to move in correspondence with what global M2 is doing. So as the headwinds start to slow down, and as this choppy sideways movement of global M2 finally breaks out to the upside, I think that will lead to the next wave higher for technology stocks in general, also Bitcoin. So I'm optimistic for what's coming over the next year and a half or so.
Okay. Now, what about the altcoin market? Do you pay much attention to that? And have you been looking at it all?
I don't. I mean, I used to be in that space. I affectionately call myself a former DGen crypto trader back from like 2015 to 2018. I don't pay much attention to that. All I know is that, so 2 things I'll say about that. First is it rides the coattails of Bitcoin. So as Bitcoin goes, so goes the altcoin market with beta. So they tend to do 10x what Bitcoin's going to do, or 100x. I think most of it is speculative nonsense. So I don't spend much time in there. The thing I got really wrong back in 2021 and 2022 is I was reading the tea leaves and watching what Gary Gensler was saying. I had a 2-part thesis. One is that the SEC is going to come after all proof of stake crypto and try to basically shut it down or force them to become registered securities. That was step 1. And step 2 is he was going to be effective, and it actually was going to shut it down, and we weren't going to see another crypto bull market. So part 1 was right. He came after them. The SEC has gone after proof of stake crypto. They've gone after these centralized exchanges, and they're going after Ethereum now. That news just came out that that they're coming after Ethereum and basically trying to force them into becoming a security or recognized as one. To me, that's the landmark case. If they lose this again and get slapped around by the judges as they have been, which was a surprise to me, I thought the SEC would be more effective in that they would actually have an effect and that would stifle and kind of shut down the next proof of stake crypto bull market. they've been slapped around by judges and they have not won these cases as I thought they would. They've gotten kind of, embarrassed by the Ripple case. They've gotten embarrassed by these other cases. I think they're going to get embarrassed by the Ethereum case too. And if that holds, and if they basically if the proof of stake cryptos aren't forced into declaring themselves securities and coming under the umbrella of the SEC, I don't see anything stopping another bull market in the altcoin space. So that's my view on it. I was wrong on that. I thought the SEC would be more effective. I didn't expect them to get to lose all of these cases, but that's what it is. So as the data changes, my thesis changes. So I've changed my thesis.
Understood. What about what's going on in the banking world? So we've had that banking facility. In fact, I haven't even been paying attention. Has it been removed? Has it been extended? Has the deadline not been hit yet? Why don't you catch us up on that?
Yep. So that's called the Bank Term Funding Program, BTFP. They closed new entrants basically as of March 12th. So they opened this facility for a year. Everybody that got in there over that year is still going to stay. Like that will last for another year, basically, that those terms that they agreed to will continue, but they're phasing out new entrants into that. And they're trying to get most banks to get into their more traditional structure that they use to help support banks who are in trouble. And I can't remember the name of it off the top of my head. But the interesting thing about it is they're going to force all banks, whether they need it or not, whether they're solvent or insolvent, to use this facility at least once a year, because when banks see other banks, or when investors see certain banks using basically the help program that the Fed has created, that stigmatizes the banks. People obviously realize that, hey, if you're using this emergency lending program, you're obviously in financial trouble. And so that immediately casts a stigma. What's interesting, and I think what is, I would say, unscrupulous about what the Fed is doing, is they're forcing all banks to use it so that people can't tell who's actually in trouble and who is not in trouble. I think it's crazy that this kind of stuff goes on, but it is what it is, right? They're protecting their own. If you're a consumer of a bank and you think your bank is fine because you can't, they're not forced to show their true condition to people, you run the risk of a bank run, and you run the risk of losing your money. And I just think that that's I get why they do that. They don't want to cause a bank run. They don't want to cause a panic. They want to stabilize the system. But for the individual consumers and investors, I think it's unscrupulous, and it's just not cool.
Yeah, and this is the challenge with the entire thesis of government right now. It's like, if you guarantee everything, then everything will work until nothing works.
Yes.
So you lose robustness in the system. You lose all of those checks and balances of the free market, whereby it's okay. Things are supposed to die when things are supposed to die. They happen in little bits and pieces at random timing, and the overall market survives. But when the government keeps intervening and guaranteeing everything and protecting everything and shielding everybody from the truth, one day everything will collapse all at once, and that'll get real nasty real fast.
Yep. Yeah, they don't allow creative destruction. And I mean, nobody wants to see a company die, but it's supernatural. It's natural for people to die. It's natural for companies to die. And if you continue to push that down the road and not allow that creative destruction to happen, that's not capitalism. That is not free markets. That's a centralized, socialized system. And you're right, it works until it doesn't. And so that's what I think I think it's going to work through the next year and a half or 2 years or so. And then the next recession, because they've built up so much of this dead weight, this creative destruction that they did not allow to happen, at some point it's just going to overwhelm them, and it's going to happen at scale, and it's going to be pretty rough.
Yeah, and just to our lifestyles and to the health of the country, even before it happens, that dead weight is taking away from the increase in lifestyle and the increase in quality of life that we would all experience through the growth of the successful companies.
Yep.
The profits from those successful companies are being siphoned off to prop up broken things, which consumes resources, both in terms of labor and in terms of raw materials. And so poor producing companies are just consuming material and taking away our lifestyle. And it's a very, very silly game that ends very poorly. But the politicians that are in power today look good for a few minutes.
I'm completely on board with you. Yep, I agree.
All right, Jeff, I greatly appreciate you being so generous with your time again. Thanks so much, guys. If you want to like and subscribe, let me know in the comments below. Any thoughts you want to add to this conversation, we'd love to hear from you. Guys, I will see you soon. Take care.
Thanks.